And in the CEO chat room, we speak with Agritrade Resources. Weak demand has hit coal prices, but Agritrade has held up pretty well. What's the company's secret? Hong Kong-listed Indonesian coal mining company Agritrade Resources says demand for cheap energy alternatives from developing economies is not expected to wane. The company saw net profit grow 94% over the past year. Revenue from coal production alone increased sixfold year-on-year. Channel News Asia's Dominic Loh spoke to Xinwei, Chief Operating Officer of Agritrade Resources, earlier on their plans for the future. He started by asking if such strong numbers is sustainable in an increasingly volatile global economy.
We managed to increase our coal production fivefold in the last financial year to 1.6 million tons, and we'll continue to increase our production of coal in our mine. And we're in the business of subbituminous Indonesian coal, which is by nature is a cheaper source of and more affordable source of energy. So our main markets is always for developing nations such as India, China, that require a lot of cheap energy in order to develop their nation. So we feel that Indonesian coal, which is mainly on the lower quality coal and cheaper, of course, will set to remain in high demand. And we see a lot of Indian power plant right now looking more towards Indonesian coal as an alternative because it's more affordable. So as long as the company sticks to its core strategies of lowering our production costs, increasing our volumes, we don't see any problem to be posting good growth and good profits in the years to come.
Speaking of coal production, revenue from that has been increasing 488%. So that's quite a fair bit. But yet you're still ramping up coal production. Are there reasons why you're increasing capacity?
Important for any coal mine is to actually achieve a high production level, optimum production level, and coal demand has been out there. I think right now what we're producing is still it's still on the smaller scale, and we hope to ramp up more into a medium scale. So we managed to do quite an increase from the previous financial year to the last financial year, about 1.6 million production, and we are targeting to do up to 3 million production for this financial year, which would bring us to more on a medium scale coal producer in Indonesia.
Operating in Indonesia, there are challenges because it has quite a volatile regulatory framework, and it also seems to be quite protectionist in some of its policies. And with the recent cap on foreign ownership and the export ban on raw materials, do you think that will somehow impact on your bottom line?
Right now, we have a 32% Indonesian partner which own the mine together with us, which is why when this regulation was in place, it didn't really affect us so much. In fact, in accordance to the regulation, we only have to divest a small amount of our equity in the 2019. So, I mean, here we are actually quite in line with the government, Indonesian government regulation. Our company, Agritrade Resources, has for the last 2 years have been investing a lot in our infrastructure. Part of our growth strategy, we have been building a coal terminal, which will have blending facilities. So if we blend our coal with a higher quality coal, I think that is part of processing and adding value to the coal.
A key strategy for the company to try and drive growth is through increased capacity, market expansion, and also R&D. So what are the plans in place to achieve those goals?
We have been investing a lot in our infrastructure, the coal hauling road, the jetty, to accommodate larger volumes of coal. And also the company has been looking for a lot of other key assets, and we will be acquiring them if it's economically viable to increase our resource and reserve base.
And that was Xinwei, Chief Operating Officer, Agritrade Resources.